So your system basically, when your system flips bullish and giving you a buy signal, it is of course a sort of a breakout trade itself because the super trend
Hmm.
works with market structure. But really, the first entry doesn't matter for you because you just switch in your head from being defensive to accumulation tactic
Yeah.
and say I buy dips here, and later on when we enter a distribution phase and my system triggers, I again flip and distribute my coins back into the
Hmm.
market and exit on rips, right? Sell the rips and buy the dip mode. You're basically these two modies. And while we trend heavily, you do nothing.
Yeah.
Mm-hmm.
I developed a little bit to taking profits along that way to help ride those trends, and a lot of that is based on some of the psychology that I have read in books just to help me ride those trends, because it does get very boring, and trading is very boring in a way. And so yeah, I mean, I suppose like you could consider it a breakout bull who will then accumulate. I just wouldn't consider myself like a breakout trader per se, but that initial position on that breakout just means that even if we don't get those dips, I'm still positioned and sort of playing those probabilities, and just allowing myself, I suppose, that affordability of being exposed to what I would now consider bullish price action. And over the next coming weeks to months, I would be expecting price to continue upwards. So, like I said, my entry really doesn't matter, because I'll end up having a few buys, and the whole idea is to ride that trend upwards. So, um,
Yeah, yeah.
it's ended up not mattering previously.
Yeah, I have a quite similar tactic when trading Bitcoin with the 60-day cycles, where I have my time windows and trend windows when my breath shifts positive in a 60-day cycle or timing window. I shift to accumulation tactic, accumulate as much as possible, and sell later on once we have the push and the breath starts distributing at the top.
Hmm.
And what I wanted to ask you, because I know how it is when you accumulate for swing trades higher to sell like much higher later on, how do you
Hmm.
manage your leverage? Is it like, do you micro trade and really like 50x leverage in because you have a tight invalidation, or do you see the whole trade as like your spot portfolio and leverage is just a way where you add exposure while borrowing on some a portion of your portfolio basically to get just more exposure within the accumulation phase to distribute later on more coins? Or do you really trade like tight stop loss, max leverage, 1% risk, or like do you count the R's, or do you just think in terms of um allocation to the market?
So, apart from the most recent Bitcoin trade that I took, everything this cycle has just been spot trading only.
Mm-hmm.
And risk has really been defined by the super trend in a way. So, for example, like if I was to take this trade here, my like stop loss would be 8%, and what I've decided very arbitrarily is that typically when these trends break, they don't break, or I am not looking at the market at that time where an 8% is what I'll be losing. So I typically round it up to the nearest 5. So I would be risking 10% on this position, and sometimes that would also depend on, say, like the higher time frame. So um, if I was then to add to a position, say here, I would then maybe risking 13 or 15%. And my risk management has been a lot based on each entry has usually been a limit of what I found is a sweet spot for me is 0.5% and 0.7% for each entry. Granted, I am entering a number of times, and then really the overall balance that I have exposed in the crypto market. So doing spot only, you can't increase that any further. So that has somewhat been the risk management system that has worked. And I will typically have 3 to maybe 5 at most charts or assets, coins, however you want to call them, at one time. And that's sort of the limit. And I think the most successful periods that I've had, I have probably only been trading maybe like 3 or 4, but my positions have just accumulated into larger positions for those.
That's
so
right.
really no leverage.
Yeah. Keeps out the emotions, right? Like you mitigate risk as much as possible. You try to cut as emotions as much as possible. Look at the market as less as possible and only trade on significant shifts, so you can benefit the most with risking the least, right?
Yeah, basically.
You try to basically ebb and flow with the market without getting attached to it. And that's, I think, because of the initial emotional roller coaster you were in, which we all faced when being fresh in this market, where you just bound to the chart, you completely detached now from that. And taking a very chill tactic to thrive in markets successfully.
As much as possible. Yeah. I mean, obviously there's definitely still times, and but when I have those things saved and come back to them, it's helpful, and it just reminds me of where I don't want to be again.
So just doing some quick math, it sounds like you're only using 2 to 3R per trade, which is good portfolio management.
Okay, cool. I have no idea. That's just what has worked for me. And it's more been just to do with how I have felt in those positions and the sort of volatility. And I think DGen, maybe it was DGen Spartan at one point, had quite a good... Here we are. This is my risk management. That's how I worked it out. That was it.
Oh, I love that graphic. I think everyone needs to take some time and meditate and think on this, because it's true. It's like if you're risking too little, and I'll caveat this: if you're just getting started out, you should use a very small amount of money, because again, you're the worst trader you'll ever be at the beginning. So you should use like less than $100 a trade, honestly, until you can become consistently profitable. But once you're past that point, it's like there's no real reason to enter the market with small size, because like it's not worth the time or the mental anguish. You have to size it correctly each time.
Yeah, and I always sort of say that small losses, and I can't remember who I got it from, but small losses and big wins, different sides of the same coin. So you have to be prepared for both and accept the small losses to get those big wins, and sort of that has also helped, along with just the experience of experiencing the system be successful, is the other thing.
That's a great quote. So for someone watching this that's just starting out, what's the one thing they should focus on for succeeding in trading, in your opinion?
In my opinion, they just need to go watch all of these.
I love it.
Yeah, and I have these saved because I've sent them to friends. But that would be the number one thing. In all honesty, that would be the very first thing. There's more afterwards, but I think a lot of people come in just not even knowing, like, the abbreviations of things. So like TP being take profit, SL being stop loss, and just these basics terminology, I think is
they're
super
completely lost in the space.
Is super useful, and I think Trader Mercury is probably the best mentor that I have found and had, and he will always be the first person that I recommend, and he's probably been had the biggest impact. And there are other books. The other one, if I had to recommend then 2 books for people to read, it would be Art of Execution and Fooled by Randomness.
I love that.
Art of Execution has been really good, and that again is somewhat similar to Fooled by Randomness in that once you read it once, you can probably cut down everything that is, I suppose, alpha in that book to 10, 20 pages. But this was so good in helping me develop my system based on the most comfortable psychology for being successful in this market. And I don't read it now, but I would say these would probably be the number one, and then buying these two books has they've probably been the most influential things in me. And the trading indicators and stuff, I mean, they've changed for me. Like I was a couple months ago using the 50 EMA and SMA as like a representation of the whole, and now I'm just doing it this way. And in all honesty, it's not going to change your profitability over a long period of time. It may be one trade, it may be different, but when you really have that like law of large numbers together, having your mindset right and a system based on your own mindset and what you find successful and what works with you is the number one thing. And having that execution around that is it. It's discipline and patience, and they're the only 2 things you need once you have a system in place. And like I said, trading is actually insanely boring if you're doing it correctly.
That's a great indication. If you're doing it correctly, you know it because you're bored.
Yeah. Like the amount of times that I've I rode the Solana uptrend at one time, the WorldCoin uptrend at one time, and like you're just watching prices go up and you're just like, okay, but I'm not doing anything. This is like, I'm just not doing anything. Half of the time you are just like 99.9% of the time you're just doing that. Like I'm doing nothing. And yeah, it's just realizing that was very helpful, and that being successful was being bored in this market in a way.
I love that.
Right.
Yeah, it's that quote from Reminiscence of a Stock Operator. Reminiscence of a Stock Operator. How he says like the money was never from my like smarts or my skills. It was from my waiting, my sitting on my hands. It's true. It's like you to hit the big gains, it takes time, and taking time in a trade just means you're doing nothing.
100%. 100%. That book, The Art of Execution, has a great thing about what do you have to get used to being bored or grab a pillow or something along those lines. And it's just like, you kind of don't realize that until you, I suppose, are successful in it. But yeah, it's so boring. I honestly find the most, not even stressful now, but the ones that are probably the most emotionally taxing, and taxing is probably not even the correct word, is when I'm accumulating a position. Because for me, that is where there is still that probability higher. There's always a probability, but there's always a higher probability that you'll end up taking a small loss. Whereas like once a trend is going and sort of the super trend moving averages have moved above my entry, it's now like, okay, now I just wait and see what happens and just stick to my system. And there was another quote that someone mentioned that has stuck with me. It's like, I don't want to look back on a bull market and think, ugh, if only I'd stuck to my system. And that has also been very helpful for me in terms of that discipline in doing things.
Man, you've just dropped a lot of wisdom on us.
It took me
you're
a
stoic
long
as hell.
time. It took me a long time to get to this, and I don't think I've shared even like a quarter of what I have.
I believe you. How do you think you got to this place? Was it just almost blowing up your account in 2021 where you're like, I just can never be like this again. I have to dig deep and sharpen this mental blade?
Yeah, it was just, yes, 100%. And it was because it was the only area in my life where, I mean, now it's very consistent with everything that I do. But it was the only area where I did not have that like small step process to getting things or that discipline. And I knew that I had been successful in other areas of life doing what I needed to do to be successful in this. So all I had to do was carry it over. And in doing that has helped me. And sort of, I would suppose even the, if I had to recommend a third book, it would be Atomic Habits by James Clear. That's a big sort of component of just being successful, I think, in life and setting goals and achieving them and small steps to getting there and having a system in place that you just stick to and believe in and just trust the process of it all.
It's interesting. Your recommendations for reading are not really even trading books. Fooled by Randomness isn't a trading book, obviously. I mean, there's some elements of trading in there, but it's not really a trading book. And the book you just mentioned, Atomic Habits, is not a trading book by any means. Art of Execution is a little bit. I mean, it is a trading book, but it's very mental. It isn't specific about trading. I've read all of these books. I'm such a nerd about trading books and learnings from other great traders. So if there's the turtle book that you mentioned, I haven't read that, but I know what you're talking about. That's from one of the guys in one of the great traders from Market Wizards. He started the turtle program because he said he could grow, like they grow turtles in vats in Singapore. And he was like, I can grow great traders, in the office, whatever.
Yeah, it's this one. It wouldn't let me do it earlier, but it's that one. And I actually have not read that book, but
I'm going to read it.
It was just, I do have it. I just haven't read it, but it was just the idea that having these, what I would consider regular people, which I would consider myself, someone who is not going to be sitting at charts or screens the whole day. I have, a job and that I really enjoy and, life that I also, and family that I want to spend time with. And just having those sort of entry and exit triggers and sticking to them, it just really appealed to me. And so while I have not read that book, the very much idea of that and the Ichimoku clouds and the super trend with definitive entry exits and things like that has been probably the biggest game changer, because it just matches my own psychology and what I am like, I suppose, in normal life.
I love it. It's great. Yeah, I think your trading style is a very deep reflection of who you really are as a person. I think once you get good at trading, or I won't say master because you never master trading, but once you get consistently profitable, good at trading, I think it really is a manifestation of who you are in your innermost self. And so you're clearly a very stoic, thoughtful, enlightened person. So it's great to see that. I think Max and I are a little less zen than you. But I think Max takes a lot of really high time frame spot positions, but they're more 60-day cycle focused. You're really, the way you're trading, I mean, it's beautiful, and it makes me realize that I should have been more allocated earlier in this cycle. and taking these big sweeping longs. I was in and out, in and out, in and out on the way up, and then kind of towards the top. I think Max and I have both been mostly in cash for a while. But it's true. It's like there was no reason I had to get in and out on the like up to 110. It clearly was just a one giant move up.
Yeah. I mean, I definitely have made mistakes. I think I let my confidence rise with the price, and I think I gave back a lot here. And then in this trend here, I didn't really have like my system for taking profits along the way.
Well, let's talk about that. How do you take profits?
I suppose I can use. Let's just go back to this one. So for me, obviously, I have the like 3 to 4 entries, 1 to 2 exits, and that's something that is a very broad way of doing it. But for me, I use the trend reversal predictor, as well as something that I have somewhat stolen, that I have now called the henvelope that does not repaint. So the idea behind this, and I suppose that's also the other thing to think of, is the psychology behind allowing myself to ride the trends as long as possible. So that's obviously the goal. The goal is that I buy low and then sell with the trend exhaustion. But the taking profits on the way up is just like a reward for staying in the position. And this is probably something that has taken me the most time to develop, and was probably the last thing that I really developed. And even now, with sort of a somewhat stronger thesis that we may not be getting the same kind of trends as crypto has given previously, almost like smaller waves where people or retail are more or have more PTSD. I still haven't somewhat figured this out, because I would say we haven't had those sort of, I mean, I suppose we have, but on a broad sweeping scale, we have not had that alt season where everything has run for weeks to months, and you could just blindly pick anything and you were going to make money on it.
The thing is, we had it 2023, right? And since then, just entered a bear market.
I suppose, but still not everything.
Yeah.
It'll never happen again. There's too many assets.
Potentially.
In 2017, 2021, there wasn't pump fun. And I think now that it's so cheap to transact on the blockchain with Solana and other things that are copying Solana, there's just going to be too many assets. There's always going to be the next fart coin. Well, I don't know. Fart coin is fart coin. Fart coin is legendary. But there'll always be fart coin wannabes. And I think there's a lot of people who just want quick money. They want to get rich quick, and that's not sustainable and not advisable. And I don't think there's ever going to be another time where every single crypto asset pumps 200, 300, 400, 500%.
Yeah, I don't think
there's just not enough money in the world to do that anymore.
I think people are, I agree. So I use trend reversal predictor. And obviously, well, not obviously, but I am probably taking off, what is it, about 15 to 20% of my position initially, and then that will somewhat increase over time. So I somewhat developed, and it's again very arbitrarily based on either being a pussy or being an idiot, but it would be sort of, I started around here, and my first take profit would be sort of 16%, and then the next one would be 18%, and that didn't feel like enough. I tried here, and it still somewhat didn't feel enough, and then this was sort of the sweet spot that I would do. So for me, an M9 is one of the sell signals or take profit signals. And then M13 is a stronger take profit or sell signal for people who don't really know about this indicator. For me, an M13 is always going to be a take profit. Now, in this specific scenario, I may have ignored these two ones here, this M13 and this M13, because I am being greedy and I don't want to be taking profit on a position that has probably only moved, say, 5 or 8% for Bitcoin. But an M13 here, 100% I will be taking profit. And an M13 here, again, I will definitely be taking profit on those.
So it depends a bit when they arrive, right? If
In
you're
the trend.
still kind of in an accumulation phase,
Yes.
then you don't take profit because you're focused on buying dips. But when you had like an accumulation phase and a big rally after it, and then these signal come, then you
Yes.
hit on them, right? And
100%.
how much percentage do you cut off of your position?
Whatever is here, and I will basically work down it. And I have never really gotten to a position where I have gone maybe past here.
Yeah, you have one or two signals that trigger, and then it rolls over.
And then the other thing will be, so like an M9 here, I would add into my position. So that would be like a signal for me in terms of if I bought here, I'm definitely adding here. And then depending on my position size, I may or may not add here. They kind of like the M13s. These become weaker as they go up. M13s, I suppose, in a way, become stronger as they go up. And then, so M9s are not as strong of a signal, but for me, I will take them as a take profit if the super trend is above or leading the cloud. So when the super trend is above the moving average, that is effectively telling me that if you think of the like wave of a trend going like this, we are more likely in this kind of situation.
Strong trend up.
More of just like a strong volatility drive in that trend. And I like to use, it's somewhat similar to a Bollinger Band, but any price that is also goes above this area. So this line going up here, I would most likely take profit on that without an M9 signal.
But it doesn't trigger any signal on your chart, right?
It is itself a trigger in that it has closed above that. And then if price is similar with that M9, I would probably ignore it. Because for me, the goal is not to exhaust my position or empty my position on the way up. It is not to sell in S2. But these basically just give me instant gratification of a winning trade, but I'm not taking off enough, or I'm not taking off enough frequently enough that ruins my ability to ride that trend if we are really, embracing the right side of that curve and doing 100% like percentages move. And I think Bob Lucas had a really good tweet at some point, and it was like the struggles of a position trader in the market has made like a big drive upwards, and you want to sell, but don't ruin your position by trying to trade it. Trust the trend and go from point A to point B. And for me, I still very much maintain that. But if I see these potential drives upwards, it's seemingly like a good spot just to take some off and be like, well done. You've stuck to your system. And if we do get a dip back down, great, you can add to it. If not, oh well, don't let your confidence ride with the trend.
Yeah. I think it's so important. The moments I am in a swing trade, the only one challenge I have with myself is to not fuck up my entry and my swing trade. Because when I start, as you said, trading the position I plan to hold for a longer time, I will fuck it up, because you sell, then you have the urge, you sell too much, then you have the urge to get back into the market too late, basically, which like enhances your average buy-in, which puts your position into risk, which then attaches more emotional pain to hold it again. Like, you just hold through your accumulation phase and you put yourself again into position that you're near your entry, which is basically bad style, right? You should accumulate in phase one, then hold, and then slowly distribute, and mostly on that. These signals that trigger for you are signals that often arrive on local tops, on spikes up. So you sell rips, right? You try to cut the position on rips up at the later stage, and then once it rolls over, you cut completely, and there you are fast with execution, you said, right? You cut like 50% and then the rest.
Yeah, I basically will try and exit. Like, if I need to, I'll exit. And it changed a little bit. It moved from being 50% to almost 2/3, 3/4 on the very first trigger, and then the rest on the second. But yeah, it's exactly right. Like, you risk on at the very start, and then you slowly start risking off as the trend goes up.
Great. I think that is a solid system for swing trading.
It's an awesome system. So I think, just for everyone watching, the 9 and the 13 counts are something from a system called TD counts. It basically is counting the number of bars that occur in a row during a trend. So if you get like, and you guys can fill in the gaps in my knowledge, but it's like, if there's 9 bars in a row that are like, they occur in the same direction, and the 9th is very powerful, or the 13th is very powerful with a lot of volume and whatnot, like, it'll send a signal, meaning that it could be a local top or a local bottom. That's basically my understanding of what the 9 and the 13 are.
Kinda. It depends on the closes, and not on the volume, actually. But yeah, it is counting candles in one direction to simplify it as much as possible. And then you have this cyclical style of them being printed as 13 or 9. But yeah, to simplify it, it is. And if you lay it on the charts, you would be surprised how often they hit perfectly.
I don't sort of how we said it beforehand, but for me, it was just, it's an oscillator. It's similar to RSI, in my opinion, similar to stock RSI. But for me, it was just more actionable. And that's sort of another quote that I got from Trader Mercury himself, was actionable analysis. And for me, just trying to use RSI was not actionable. I would confuse myself. I still do. But this is just, it's either an M9 or it's not. It's either an M13 or it's not. It's just so much easier for me to live with a decision based on that, and be consistent with that as well, which helps me. And other people may be more successful with other things, and that's fine. But for me, it's just simplifying it as much as possible.
Yeah, that's how you develop your own system, something that works for you and you can integrate in your own life, right? Because if you have a high ticking system, like on the 5-minute chart, it works great, but you cannot integrate it in your life, your system, doesn't help, right? So you develop a system that fits within your lifestyle and allows you to catch the bigger moves up and keep your chill and keep emotions out of the financial stuff you do.
Basically.
Wait, Hen, go back to your indicators. I had one more question for everyone that's watching. So I think we explained the TRP count, but what was that line that was above everything?
That was a Bollinger Band, right?
Basically a Bollinger Band. I think they're called something different, but yeah, it's just basically a Bollinger Band. It's just a measure of volatility. You can use whatever. I think you can also, there's also like Donchian channels as well. I think just finding one that doesn't repaint is important. Repainting is the system sort of looking back on itself and finding the best fit, which can look great when you are back testing, but when you're trying to trade in real life, it doesn't give you the same signals. It gives you the signals like a week later or something along those lines.
Interesting. So it's always above price action here, at least.
Yeah, there's a second one that you can change it where you can have ones where it's below as well, just like a Bollinger Band. But I purely use it for taking profit. I have no interest on trying to buy bottoms with it, which you could buy like the back testing or just like playing around, being bored. It looks like it might be successful, maybe, but for me, I am purely using it as a way to take profit.
It's interesting that you take profit on the close above the Bollinger Band, because for Bollinger Band trading, that would be your long entry, right? Like you break out of the Bollinger Band, you close above. It would be.
This is slightly different, but yeah, I understand what you mean. Because this is, and there's ways that you can do it, but there's like extremes. It's almost like a rainbow kind of thing. I think you can get one. There's some indicators where you can look at like standard deviations of Bollinger Bands and things like that. And for me, it was just something that I developed after not taking profit on a trend, and I was like, I need to work on a system that does that. And that was sort of like the most recent thing that I have added. And like I said, I still maybe have not got the take profit percentages correct, but getting those triggers has been the sort of the first thing. And I suppose crypto doesn't always give you the weekly opportunity to take profit, so you kind of just have to wait until the next wave, whenever that's going to happen. Maybe next week, maybe in 4 years' time, but it's really only from experience and doing it that I think you can make changes in that specific kind of aspect of it. The triggers and everything else I think is great, but the entry sizes and exits and taking profits is really only from being in the arena, as they say.
Yeah, definitely.
In my opinion.
Yeah.
Great. So Hen, where are you taking? Where are you 100% out? So we talked about that you would TP, and just to be clear, I think what you're saying is you're taking out 26% of your position, and then you're taking 29% of the remaining. You're not.
That's if I'm taking profit. That's purely if I'm taking profit. That's not on a trend loss or anything along those lines.
Yeah.
If it's a trend loss, there is somewhat two ways that I will go about it.
So just on the most recent Bitcoin run up that we've been looking at. So did you clip out of this without even the trend being fully lost?
No, the trend was lost here, and then I exited most of my position.
Understood.
And then it very much changed, and it also depends on the high time frame. So for me, if I lose the trading time frame, that is where I'll exit most. So maybe it'll be easier if I do this. So it'll be like here. And then the second aspect is, so you can see kind of like where I've taken position or sort of taken out of my position. The second time that I would take profit would either be we lose the higher time frame super trend, or on a potential lower high here. So it's like a definite exit, or it's on what I may think is a lower high, or a loss of the higher time frame trend as well. So it's definitely this one, and then it's either A or B is where I'll look for it. And it's not perfect. there are times that I've taken profit here and then market has just continued to go up. And I've been like, okay, got to get back in kind of situation. Or it has taken profit here. Oh, sorry. Yeah, I mean, taken profit because I've rode the trend. But then I've sold here and then price has just gone straight back up. It is just what I have found, again, what has allowed me to be at best peace with the decisions, and that is seemingly what has just been the way that has allowed me, and it's worked perfectly a couple of times, but it's just the way I don't know, the way that it's just developed for me.
It's really fascinating, and it's very balanced because you're obviously taking profit on the way up at local tops, so you're doing very well on these trades.
Attempting to when the things obviously the trend reversal predictor is not 100% accurate. You know, even if it occurred, say here, I would end up taking profit, but it's not a local top. You just kind of, like I mentioned before, like the law of large numbers, and that over time, it will be successful. And that was another big thing for me, is realizing that no system is perfect, and you have to be okay with those imperfections to get those times that they are perfections. Absolutely.
So one of the things I noticed when you were tabbing through is that it looks very, very different on the daily time frame than the 12-hour.
It's just a slightly different trend.
So did you develop, because obviously with this you are breaking down much, much lower than with the 12-hour, or are you clipping out when it becomes gray on that big wave? Or, like, I'm just trying to interpret how you would interpret if you were trading this one.
It's very variable. I did not trade this as a trend. I ended up trading it as a range. But the thing that allows me to choose these, and I suppose this is somewhat new that I have done, and a lot of indicators that I have ended up taking, is this. So I'm not going to share it. People can find it if they need to, because I had to work a lot in finding things. I will share it with you guys afterwards, or you can even clip this out if you wanted to. But it's a couple of indicators that basically look at what is the most profitable settings for super trend and the Hull moving averages. So this is how I set up each different time frame. So for the daily, my Hull is going to be the 223, which I think has slightly changed. So every week I will recheck this and just change it. And other people have done the same sort of things in terms of, I think the one that we may remember most is Trader Mercury going from the daily 200s to the 12-hour 200s. So somewhat adapting to the market. So I will use the Hull 223 here, and then the 4.7 and the 12 for the super trend. And like I said, this probably does not impact the profitability over time, but it just gives me that kind of confidence that I'm still using a relevant time trend
That's interesting,
for that asset. And then the moving average that I have down here is actually the optimal moving average for that asset itself. So these two here, the one in the top right corner and the bottom right corner, will change with the time frame. And this has always been a theory that I have had, and you've probably seen it in the Trader Mercury's Discord, is that different assets will have different time frames, but they're still sticking with the 200 moving average, EMA and SMA. I've always thought, and sort of for me, I don't want to delve into those lower time frames, but 4-hour 200s, for example, are the exact same thing as a 16-hour 50s.
Exactly.
Just multiplying
bring
it.
That
so
not together, yeah.
So I have always thought, okay, well, every asset probably has like this random moving average number that we just don't use, or this time frame for the 200s that we can find out. I've always thought there's going to be a way to find out, and only recently have I sort of discovered these. But the bottom left one is one that is for the asset in its entirety. This one does not change by time frame. So for me, it's about trying to find a higher time frame that is somewhat similar to the optimal asset time frame, and then that will be my high time frame moving average and super trend indicator for that asset. So if, for example, I was to, we can just roughly draw that. That's like our asset time frame for Bitcoin right now. We can go to like the 2-day, and you can probably see how it still stays somewhat consistent. And then I'll just look and see, okay, what is what time frame or moving average fits that best. So if I was to use the 2-day, my indicator would be a whole 101, and then the super trend settings here. But I just find that the daily fits it a little bit better. But this one in the bottom left-hand corner is just the overall asset moving average that seems to work the best. And it, like I said, it may not, it doesn't really change things much per trade, but it just gives me a little bit more confidence in my execution that I am following something that is profitable, and that is just the way that the indicators are set up, that they will run through so many different time frames and different trends to figure that out. That's really this is the new thing that I've been looking at and working on, and this I have really liked.
Got it. So the big takeaway here is that every week you're updating your clouds, your blue and your gray clouds, with the latest data on the asset.
Yeah, and it doesn't, and this is I've only really been doing this for the past couple of weeks. And it's seemingly just like a change in the indicator by 2. So like your EMA or whatever would go from 200 to 202. But it seems like it slowly evolves with how the market trends. And it seems like quite a good thing for like different assets. Even sort of the S&P has something slightly different. And then the levels are based on the volume. So that is another indicator that basically looks at, I think, the one that uses like point of control, the POC.
Mm-hmm.
It works out levels based on the extremities of that point of control. And that's something that I've been looking into as well. It's just basically me removing as much of my own interpretation and maybe bias is the wrong word, but like my own thoughts, and just letting the data dictate what trends and settings are the best for that asset. And then it's just about me executing around that.
I love that. I think that was a big leveling up, I think, in my own trading, which is a very different style than how you trade. But I think when I started marking out levels, I was doing it kind of how I saw it, right? I was marking support, resistance, how I saw it on the chart. And then I was like, well, that's my bias. It may not be how other people see it. And you're doing it now, is you're marking bottoms and tops of weekly or monthly levels. And when I started doing that, I started realizing that a lot more people are marking out those bottoms and tops of the weekly or monthly levels than they are drawing the boxes, which are more subjective. And price reacts much differently to that specific dollar amount level than anything else. So yeah, I think that's been a big level up for me.
Yeah, I just like to think less, basically.
Yeah, exactly. It's like I don't have to think if I'm drawing this correctly or not. I'm just like, I know this is the weekly or monthly high or low. I'm just going to mark it on my chart and I'm going to move on.
Yeah, and so that's sort of why you'll see on these ones how I have 2. So I have one set up for the 12-hour and one that I have set up for the daily. So for me, just having coded these, I just change these. and I just changed the visibility. So this is only visible on the daily, and then the hourly one pops up, and that is visible on the hourly, and that's like my 12-hour settings, for example.
It's awesome.
That's how I got to it, basically.
Yeah. There are more thoughts behind your system than you would initially think when looking at the chart.
I know, it just looks like little crayons and just colorful clouds.
It's funny how big the bubble is there at the top of that range. I guess it's just because it's a huge consolidation or distribution period, and it's a big
it's
turning
kind of what
point.
it seems like, is that when it gets into that cloud region is when you start getting more of those like ranges that form. Like you can see right here how like you're definitely trending when it's above it, and then once it starts moving in, it's like, okay, or maybe we're getting into more of a consolidation sort of period, and then the super trends sort of lines up with the bottom of that volume range. So then it becomes a little bit discretionary of, what is a loss of the range. And you can see here that I sort of took this as a loss of the range, and then this one here is like your definite, even though the super trend had not been hit at that point. Kind of like when it all lines up quite nicely, it's quite a nice confluence that exists. But there's definitely false signals that occur, and that's where you just kind of have to accept the small losses on those time frames and keep going.
Yeah, when you zoom out on this picture of the chart, we see clearly the hull EMA here, how smooth it is, and making that waves on your chart here. And it makes totally sense that the cloud widens, because the hull will run further until it loses the momentum, but the super trend will stick to the bottom basically here.
Yeah.
And mark out the low. So these cloud expansions are always and
it's definitely good, I think, for bear markets. It's been incredibly useful.
Yeah.
Just not getting chopped up and sort of letting bottoms form. And even if you look up at didn't use it at that time, but even over the 2020, I can maybe go. I like not using the log, but you can see here how you had a good almost year-long trend that just stuck with the super trend.
Yeah, it's super clean.
The whole way.
I like it very much. I would like to read into this furthermore and try some things out myself, because I had just by watching your stuff, I had some ideas how to combine this with some of the things I have on my charts maybe.
Yeah.
But let's see if we find time for that. Would love to experiment a bit with it, because I think there's so much more potential. It's very good, but I see that maybe we could do a little more adjustment and make it even more cleaner than it is already.
Yeah, I really like the exponential hull, but I just haven't. This is just the basic boring hull.
No, it looks good. It's just very cool.
No, I know the exponential one I have found is a little bit better, but I just don't coding wise.
Okay,
it's a little bit harder.
I want to hear. Everyone's got war stories. What was your greatest trade of all time?
Probably the best trade of the cycle would have been buying and accumulating Solana at about low 20s.
Wow.
And then those lines are going to come back, which is annoying. Yeah, buying and accumulating Solana at about low 20s, and then I think selling around hundreds, 180, and then sort of in this kind of region around here. And then not looking back. I haven't traded Solana since. And that time, that and RNDR at that time were the only two. They were the only two positions that took up my whole portfolio. But RNDR went from 1.5, and I think I took that to about high 4s or 5s, and then Solana somewhat similar. It was probably maybe around here and then maybe about here. I don't think I was in Solana at this point, but yeah, they would be the two that I will remember they'll be the two that I remember the most.
So that's incredible. So it sounds like you were in it with pretty much your whole portfolio.
Oh yes, 100%. I had like a 65-35 split of Sol, R, and DR.
So that means that you like 5 or 6 or 7x your portfolio.
Something like that. Yeah. Yeah.
Not bad. Not bad.
I learn a lot. You give a lot back trying to hit whiff and popcat, and a few of those. I don't think I was ever truly successful with those, so you give some back. But yeah, they were probably the biggest ones. And then I think I've had a good Pepe and a good Doge. I could probably count the most successful ones on one hand, and could probably write a book about the ones that aren't successful. Yeah, it averages out.
It is, but you're kind of a winner averaging winners, so I love it.
Yeah.
Do you ever think that this system you've built, have you found that it doesn't work for some coins, or is it like better for the majors, not as good for the smaller ones like Popcat, or is it generally kind of work for all of it?
The time frames have had to be slightly different. So the meme coins at that time, I was still checking the chart twice a day, but I would be more on the 6-hour time frame. So I would maybe miss a signal in between. But to me, the volatility that they gave was too great. So no, I mean, it's just trend trading and just doing it on a different time frame, and just expecting maybe a quicker trend and a bigger, sort of more volatile trend on the meme coins. So I already had that somewhat adjusted before the start of the cycle. I'd back tested a few things and saw that when the meme coins ran, they had run on like a lower trend time frame. So if you're using the 200s, they would maybe do like a 1 hour 200, for example, rather than a 4 hour 200. For me, it was just a different time frame that I would use based on those.
Yeah, that makes sense. Meme coins are just, the volatility is much greater, so the moves probably play out on a much faster frame. It's like big ships turn slowly, smaller ships turn much faster. So it makes sense that you're trading like 1 hour, 4 hour for the smaller stuff.
Yeah, that would be. I don't know if I would. I don't know about meme coins anymore, but yeah, that's what worked. So we'll have to see if they come back.
All right, last question for me, Hen. Now that you've given us your greatest trades of all time, can you give us your worst trade of all time?
Well, I think I started with it.
That was truly your worst trade of all time?
Yeah.
You lost it.
Yeah,
all
to bring up
that,
PTSD. Right? I love some good some bear porn.
Bear porn.
I think,
or lost
porn,
I guess is what it's called.
Really, also just this loss of the range, I think I took a very big haircut on this. I started actually building a leveraged Bitcoin position across here.
Interesting.
I was seeing it as a higher low.
Like you're seeing it as accumulation.
I was seeing it as a trend. I was seeing it as a trend. I saw a higher high and then a higher low, and I was like, it's near the bottom of the range. And then I was thinking to myself that I think it still does. I don't think I was taking the stock market too much into consideration, but yeah, I was just seeing it as that. And then I lost here more than my initial net worth at the start of the bear market.
But you grew it by so many multiples, it doesn't even matter.
Yeah, so it's funny. I mean, I think it's just a nice way it's a dramatic way of saying it. But that's probably the biggest loss that I've taken recently.
It's a dramatic way to say it, but it's also good for getting to know the scale of how the market can develop. Right.
And that's why I don't like using the log charts. It gives you a sense of really what you're dealing with. I think the log really dampens the volatility that we are exposed to.
A lot, yeah.
I haven't told Max this, but I actually stopped using log charts this week as well for different reasons that I'll tell you later. But I turned all my charts on arithmetic. And I lied, and I actually have another question for you because it's very interesting all the things you keep saying. So you're a high time frame trend trader. I guess that's how you would describe yourself.
Yeah.
And you're long only. So that means you're not entering trades very often, and there could be a period of like, who knows, a year before your system will flip bullish again. How do you have the courage to size up again a year from now if you're basically not trading for a year? How are you going to have the courage to
I know my system has been profitable, and if we get to a position where it's been a number of years or so, and let's put this back on. Oh, there we are. I was trying to post these, that's why it wasn't working. If that is the case, I'm rebuying 40-60% lower. So I know that regardless, my mindset is bullish on Bitcoin long term. I think a lot of people, the general consensus is that one day it will match the market cap of gold, hopefully with gold staying at its current market cap rather than gold decreasing down like Ethereum is doing right now. But just being able to buy lower I would have much more conviction, just because of that time aspect of it. And I think one of the things that has served me well is, in especially the alts, if something has trended really well, I usually am not adding back into that because I don't believe that they will trend well again. They may hit another multiple, but like if you look back on a few of the charts and even sort of Bitcoin last cycle, it has a huge trending move, and then it will have continued trending moves, but they will not be as big. So it just sort of rotated into a different asset. So if Bitcoin continues to go down, then if it ever reclaims and triggers, I would be even more bullish at lower prices. Just because I've afforded myself that by being patient and being out of the market and giving it time to recover. So yeah, it doesn't bother me at all. I mean, if I am loving life right now, regardless of where the market goes. So if we have to wait another 1 year, that's fine. I am able to save money. I will be able to probably just keep increasing the amount of cash that I have, and probably will end up at some point really just putting money into the Bitcoin ETF and being done with it, really is the most likely scenario.
It's very balanced. It's very zen.
Zen, yeah. That's the word.
Yeah. Cool. So where's the bottom?
No idea.
You don't call bottoms?
Well, I don't even call tops, I suppose, in a way. I just, whatever the market gives me. Bottom could be here. It could be, everyone seems to be thinking the here, but I think, like I said to you, where is it?
But according to your system, the bottom doesn't matter for you. It is
Not
just...
at all. Not at all. But what we haven't seen is, like we said previously, the ETF buyers.
Yeah.
They only had a couple of days.
Yet.
They only had a couple of days. And who knows? Who knows whether this was the echo bubble, Bob Lucas 16-year cycle. We go into a 3-year bear market now as a reset. Who knows? But
yeah.
I'll be there when it turns. So I don't really
love
care.
that.
I will be there too.
it's true though, Hen. Like, we haven't really I mean, since Bitcoin's creation, we have not experienced a large macro bear market.
No, and I hate being the kind of macro kind of person, etc. But the chart will tell us everything. And
the chart will tell us everything.
Like I'll keep checking the chart twice a day, and if there's no trigger, there's no trigger. But if there's a trigger, I'll take it.
Great analogy. Like perfect execution there.
If there's a trigger, there's a trigger, and we'll take it. I love that. I might have to get a tattoo of that. If there's a trigger, I'll take it. That's better. That's smoother.
Yeah, very American.
I'm sorry. As the token American on the call.
Love it.
Well, this was great, Han. Max, do you have anything else? Or Han, do you have anything else? Anything you want to say to all of our millions of followers and fans?
No, just keep at it. Don't give up, and just find something that suits you. And that's the biggest thing, to be perfectly honest.
Great final words, man. Thank you that you were here with us.
No worries, I really
Thank you so much.